or non-for-profit. And then the third one, which we will also discuss in a few weeks, is about the VAT. So in Belgium, VAT is applicable to all kind of organizations. So it doesn't matter if you are a non-for-profit or not. It's the activities that you are doing that decides if you are liable for VAT or not the legal structure. So yeah, this one is so the patrimonial tax, and it was created a while back. It's an old tax from the 20s, because they wanted non-for-profits to be taxed for the income they were receiving from people that were that passed away. And so if you are an individual and you are receiving inheritance, this is taxed. And if you were a non-for-profit, you were not taxed on this income, and therefore they decided to have this tax. That's why this tax is actually on your assets, because we assume that if you get money from people who are passing away, it would be either a building or it would be actual money on the bank account. It applies for ASBL, which is the normal non-for-profit in Belgium, but it also applies to private foundations and international non-for-profits. So in Belgium, non-for-profits, international non-for-profits, and private foundations, even though they are different legal entity in terms of taxes, it's mainly the same logic, irrespective of the legal status. And the tax applies from the January 1st following the incorporation of the organization. So for example, if you start the organization in February, then you start being liable for the tax the next year. Why are we discussing this now? Is because the deadline for the tax, so submission of the tax declaration, but also the payment, if you actually need to pay that tax, is the 31st of March. So actually you need to submit your tax declaration before in order to be able to pay it at the end of the month. Yeah. If you submit on the last day of the month, of course, they are not going to tell you, they won't have the time to tell you how much you need to pay on the same day. Yeah. So that's why we are explaining this now, beginning of March. So it's a tax that is based on assets. So if you know a bit about accounting in general, when you look at your balance sheet, you have assets and liabilities. So your liabilities is everything that you owe to other people as an organization, and assets is everything that you own or everything that other people owe you. Yeah? And there are different categories of assets in accounting. One of them is land and buildings, which is the first one you see on the list. So if your NGO, I think it's very unlikely for international NGO to own their own office, but if you do, this is part of the taxable amount that you will have to, from which we calculate the tax. And the value that we take is actually the resale value. So it's not actually for example, let's say that you have bought your office for a certain price. It's not about the price that you pay at the time, but the price that you would get if you were to resell it today or on the 1st of January, because all of those calculations are based on the amount on the 1st of January of this year. On the top of that, you have several categories of assets that is coming straight from your accounting. So tangible fixed assets. I'm not going to go into the detail of those different categories because it would go into very accounting specific topics. So tangible fixed asset, financial fixed assets, amount receivable after more than 1 year, trade debtors, other amounts receivable, current investments. So it's every it's nearly every asset that you as an organization might have. And then there is in a way, the most complicated part, but is also the most likely basis of your tax as a non-for-profit. It's how much you have on your bank account. The current balance on your bank account is part of your assets. It's something that you own. It's your property. It's your money as an organization. So this is, in general, for international non-for-profits in Belgium, this is a big part of your assets, because you usually don't really have you rent your own office, and if you have assets, it's mostly computers. So you are not a sector that is very heavy on assets. Most of what you own it would actually be on a bank account. Yeah. So I'm just going to take an example here, because here you go. It's not the whole amount that you have on your bank account that matters. So you have to think about the amount that is actually staying on your bank account for more than a year. Yeah. So if I take we're going to take the balance on your bank account, and when I talk about bank accounts, I mean all of them. So if you have a saving account, if you have a current account, it's the sum of all of those bank accounts. Yeah. Let's say that on the 1st of January 2023, you have I don't know, 120,000, for example. And on the 1st of January of this year, you have 150,000 on the bank account. Okay, so here, and let's take another example where it's the other way around. You start with maybe the same amount, so 120,000, but on the 1st of January 2024, you end up with 100,000, so less than than what you had the year before, yeah, on the same day, yeah. So what is the taxable amount here is what has been on your bank account the whole year, yeah. So if you started the year with 120,000 and you ended the year with 150,000, what has stayed in the bank account is 120,000, yeah. So one way to calculate this is to use the min formula in Excel. So here it's the lowest amount of the two, yeah. If I take the other example, you started the year with 120,000 and you finish the year with 100,000, your taxable amount is 100,000. It's the smallest of the two, yeah. So again, what is important here is not to take the full amount that is on your bank account, is to take the amount that has stayed the whole previous year, yeah? Based on what was your balance on the 1st of January of the previous year, and then the balance of this year, yeah. And if you add all of those amounts, so land and buildings on value at the resale price, all of those categories that you can find in your accounting, and then calculate at least a part of the amount that is on your bank accounts, and you add all of this, you have your total taxable amount, yeah, from which you will be taxed. Yeah. One of the reasons we are also explaining this is because the law on that tax has changed between 2023 and 2024. So if in 2023 you were actually doing this already, declaring and paying your tax, which you should be doing, of course, the way it's done now is different, which means that it's very likely that if you were paying last year, it is possible that you no longer need to pay. or if you have to pay it, it's probably going to be cheaper than the amount of last year. And the reason why, one of the reasons why, is the fact that there is an exemption threshold. So with your total taxable amount, so if I take, for example, here, here my taxable amount is 120,000 and here is 100,000, right? But we could be working with numbers that are a lot lower than 120,000. You could be an organization that have a lot less money on the bank account. And in this case, if you, let's go back to the presentation. If you have less than 50,000 as taxable amount, this is an exemption. You are exempt from the tax if it's more than 50, up to 50,000 as taxable amount. Before that, so until last year, it was 25,000. Yeah. So if you were paying before, it is possible that you no longer have to pay because your taxable amount is between 25,000 and 50,000. Yeah. Until last year, the rate was 0.70%, 17% of the declared assets. So I will show you later the tax declaration itself. You have to show how you calculate it. Assuming that you were above the threshold of 25,000, you had to pay a tax on 0.17%. Okay. From this year, so from the tax declaration that you have to do this year, the rate is no longer a fixed rate for the whole amount, but something more progressive. Yeah? So between 0 and 50,000, as I was explaining before, you don't pay tax because you are exempt, right? If your assets is between 50,000 and 25,000 euros, this bracket, so between the amount between 15,000 and 250,000 would be taxed at 0.15%. And then from 250,000 to 500,000, the amount between those two, the taxable amount between those two would be taxed at 0.30%. And then above 500,000, 0.45%. So now it becomes progressive. Before it was 0.70, and now it's 0 or 0.15% or 0.30% and 0.45%. So the bigger your assets is, the more likely now you will end up having to pay more than you used to. Because of course, if you're handling, I don't know, more than €1 million on your bank accounts, for example, well, of course, now you're going to have to pay more taxes because it used to be 17%, and now we can go up to 45%. On the other hand, if you don't have more than 250,000 of taxable assets, because 15% is lower than 17%, you are actually paying less than you used to pay in the previous year. So again, the previous system, if your asset was below 25,000, you were not paying the tax. If your asset was above 25,000, you would be paying 17% on the amount above 25,000. Yeah? And now, since this year, the threshold has increased, so it's no longer 25,000, it's 50,000. So everything below 50,000 would be taxed at 0, so no tax. And then above that, you have the progression in terms of percentage. Okay, so in practice, how that would work, yeah? So here it's a bit of a small exercise. So let's say that you have 190,000 of assets and 550,000 of assets. So I'm just going to use an Excel sheet because it's easier for everyone. So how much money? 119,000 and 350,000. Okay. So if you remember, the first tranche of money is between 0 and 50,000. And for this, we pay 0. And then for the amount above 50,000, so between 50,000 and, was it 25,000? 250,000. So here we are below 250,000. So the maximum is 190,000. The difference between the two, okay, we are missing a 0 here. 140,000 would be the amount to be taxed. Yeah? And between 50,000 and 250,000 is 0.50%. Yeah. So that would be 210. Is it what I had? 210. Now, if we take a higher level of assets, we will have to play with 3 levels of taxes. Yeah. Because this amount is above 250,000. So we have, again, the first one for €0. The second tranche of money for 250,000, we calculate the difference between the lowest and the highest for that tranche of money. And we calculate, so I'm just going to put the percentage here and then the formula. So we are at 300, but because there is still 250,000, sorry, and is it 350? So 350,000. That makes 100,000, and this is taxed at 0.30%. Is this correct? 600 euros. So it's 300 euros plus 300 euros. So you can see that now that the tax is progressive, the amount is it's kind of exponential at some point. Yeah. The higher the amount of assets, and the more and more you start having to pay. So this is how you calculate the tax. Yeah. I don't know if we already have questions about the tax itself, or if it's clear for everyone. Yosra?
We don't have question yet, but I encourage everyone to either put their question in the chat or raise their hands if they would like to ask us directly.
Okay. In the meantime, I'm just going to show you how to fill in the form. Even if you don't have to pay the tax, you still have to declare it. Huh? So that's a general principle in Belgium. Even if you don't have to pay a tax because you are below the threshold, for example, you still have to declare and put that you are not. You put 0 in the declaration, and you won't be taxed, but you still have to do the declaration. The declaration look like this. We we will send a copy of the tax declaration, so you can use it. If you have an external accountant, it's very likely that he's doing it for you. If you don't have an external accountant, it's up to you to do this, yeah. And you have to do it most of the time. The administration is not telling you that you have to do it. It's assumed that you know that you need to do the tax declaration, yeah. So here it's in French. Of course, you have to do it either in French or Flemish in Belgium. But it's basically putting all the amounts that is coming from your accounting to calculate a total amount here, which is the taxable amount. And from the taxable amount, what we just did is calculated by tranche of money, how much money for each tranche of or bracket, tax bracket, how much tax you need to pay, and then you have a total, yeah. And then based on this document that you have to submit to the tax authorities, you can also use MinFin if you want to do it online. They will send you confirmation of the amount and how you're supposed to pay it, yeah. So here the key is to, of course, do the declaration, but again, it's very likely if you have an external accountant that is going to do it for you. But it's also important to know the amount that the amount of the tax for budget purposes, yeah? Or for closing your books, because this cost is related to the previous year. So it's a tax that you need to put in your books. Okay, any questions on this?
Yes, we have Lisa who is asking if you could provide examples of assets of non-profit organizations. I think she might mean taxable assets.
Okay, I think what I know from experience, I'm assuming here that no one owe their own offices or buildings or those kind of things. So the only assets you're going to have is what's on your bank account. I'm going to just come back to the list of assets here. Yeah. So assuming you don't have lands or buildings as a non-for-profit, you can scrap this part, yeah? Fixed assets is like value of your the resale value of your computers, for example. So fixed assets is like computers, printer. If you are still printing and you have your own printer, if you have a server, an IT server, if you bought your own furniture for the office, those can still have value. So those are investment that get depreciated. But if the depreciation is not finished, those assets still has value, and this remaining value is taxable. Yeah. So class 23 to 27 is mostly furniture. If you are remaking your office, so in some offices after 10 or 15 years, you are doing some work in your office. This can be also depreciated. Your website can be depreciated. Not the maintenance of your website, but the actual creation of your website in the first place, because it's assumed that you will keep your website for several years. So the residual value of your website is taxable. Yeah. Financial fixed assets, it's for example, if you are renting an office, if you had to give guarantee at the very beginning, normally you have to pay a guarantee for your office. This would be considered financial fixed assets until you get the money back from the landlord. Amounts receivable after more than 1 year, well, I don't have that much of an example for this. Trade debitors is if you have invoiced clients. This is not about projects. So your client cannot be the European Commission for a grant, for example. But if, for example, you have membership fees and you have invoiced your members, this is a debt that they have towards you because they have to pay that invoice. So that would come in on a 440 account. The 50 to 54 is situation where if you, very unlikely to happen for most of you, but if the organization has decided to put money in on the stock market, if you own I don't know the name, obligation in French. So if you start investing because you have so much money on your bank account and you start investing more or less long term, those would be under class 54, and those would be a taxable amount as well. So if you add all of this, then you get your total taxable amount. This is very related to your accounting. Yeah? So if this is something that either you know or your accountant would know and would be able to tell you. Huh? I hope it kind of answered the question. Any other question, Yasa?
No more questions so far.